Good morning, friends. In my series on the income tax cases, welcome to my YouTube channel, Advocate Amit Kumar Gupta. The case which we will discuss today is AKIK Tiles Private Limited versus Joint Commissioner of Income Tax, and this case has been reported in 95 ITAT Tribunal, short notes 77. This matter has been reported on the case decided 13th April 2022, and this matter has been decided by Ahmedabad ITAT. This matter is regarding the expenses which are to be allowed to the assessee under section 37 subsection 1. The main criteria for allowing the expenses under section 37 subsection 1 is that the expenses should be wholly and exclusively for the business. Although it is not necessary for the assessee that he has to prove that what benefit the assessee is getting from the expenses, the assessee has to prove only whether these expenses are wholly and exclusively done for the business. At the same time, the department cannot sit into the armchair of the assessee and decide what expenses to be done and what expenses not to be done. In this present case, the assessee paid commission to the various parties. Assessing officer made the inquiry from the assessee that why these payments have been made, what services the assessee has availed from these commission agents, but the assessee was not able to demonstrate with the evidence the services which the assessee has availed from these commission agents. So the assessing officer disallowed the expenses under the head commission under section 37 subsection 1. Apart from this, the assessee has also paid some consultancy to the advertisement consultants, and apart from that, a very big expenditure was also done on the advertisement. But the assessing officers disallowed the consultancy which has been paid to the consultants on the advertisement, on the point that because a lot of expenditure was done on advertisement, so there was no justification and there was no evidence that any services have been received by the consultants. Apart from that, the assessee was not able to prove the identity of the consultants to whom the consultancy regarding the advertisement has been paid. So, assessing officer made the disallowance both on the basis of the commission expenses claimed by the assessee and the consultancy paid to the advertisement consultants. The assessee went into the appeal to the CIT appeal, and CIT appeal also upheld the order of the income tax officer. The aggrieved assessee knocked the door of the ITAT, and the ITAT upheld the order of the income tax officer and the CIT appeal by saying that although assessing officer is not a party to decide whether some expenditure is to be done or not, only the assessee has to prove primarily and on the face that these expenses have been done for the purpose of the business, and the assessee has to demonstrate that what services the assessee has received in lieu of the payment made by the assessee. But in the present case, the assessee was not able to demonstrate that the services have been received by the assessee in respect of sale of goods, what goods have been sold, what quality have been sold, and what items have been sold by the assessee. And apart from that, the assessee was not able to prove the identity of the consultants to whom the consultancy charges have been paid. So in the light of the evidence submitted by the assessee and all the facts and circumstances of the cases, the ITAT upheld the order of the income tax officer and the CIT appeal regarding the disallowance of both the expenses. Friends, my suggestion in this case is that the assessee has to at least produce some basic documents whenever the assessee is going to claim some expenses. Like in case of commission expenses, the assessee should maintain the copy of the bills which have been given by the commission agent to the assessee. In that bill, the proper description of the goods sold should be there, at which rate it has been sold, at which rate the commission has been paid to the commission agent, and all other details. Simply debiting the expenses with the in the name of the commission and showing it into the profit and loss account will not discharge the assessee from its responsibility in proving that these expenses have been done for wholly and exclusively for the purpose of the business. So if you are not strong in your documentation, then you have to face the music of the disallowances made by the income tax authorities. So the assessee has to be very particular in maintaining the documents, especially in case of some expenses like consultancy and commission, because the department is now very strict on the debit side of the profit and loss account. There was an era when most of the additions were coming from the balance sheet, but now since 2012 there is a very strict provisions regarding the amount to be received in the balance sheet, like share capital loans and etc. Now the department has moved from the balance sheet items to the profit and loss account items, and they are making additions like nothing. So it is always advisable to maintain the proper documentation. For example, in case of petrol bills, you have to keep the petrol slips. You have to maintain each and every voucher where the bills are not there. You get it signed by the recipients of the expenses made, so that whenever the assessments are there, at least you should at the face demonstrate that these expenses have been incurred wholly and exclusively for the purpose of the business. Thank you, friends.